Now, even as the two superior superpowers impose tariffs on each other, Africa's manufacturing sector is expected to grow by 4% in 2025. Now, this growth will be driven by improving economic conditions and the potential spillover effect of the trade shift in the West towards Africa. To capitalize on this trend, African governments are advised to create a favorable investment climate, diversify trade routes, and prioritize infrastructure improvements. But however, will African governments be able to seize this opportunity and overcome the existing challenges such as inadequate infrastructure, bureaucratic red tape to attract and retain foreign investors? That is the big question on this particular topic. And joining us to unpack this, we have Professor XN Iraki. He's a professor, University of Nairobi, Faculty of Business and Management Sciences. And we also have Dr. Taofiq Raimi. He's a business economist and policy analyst in Abuja. Thank you so much, gentlemen, for joining us.
Thank you for having me.
Well, I'm also told that Bamidele Ayemibo has actually joined us, his lead consultant, 3T Impex Consulting in Lagos. Thank you, gentlemen, once again for joining us.
Thank you. Good evening.
Thank you.
All right, so
Thank you for having us.
Let me begin with Professor Iraki. Now, Professor Iraki, as we all know, President Trump imposed a 10% tariff on all Chinese imports. You know, that is on top of a similar tariff from President Joe Biden. Now, do you think that these sequential moves affect global supply chains and overall price stability?
Good afternoon. I think as an economist, I've never been a supporter of using tariffs in any trade war. So by imposing tariffs on China's products, you can be sure everybody is going to feel the effect because Chinese products will become more expensive. And if they become more expensive, there will be less demand for them. And if countries start retaliating, as you can see, all of them are reacting, whether it is European Union, whether it is China, whether it is Mexico, Canada, then what is going to happen is that the trade will depreciate. There will be less trade among countries. And since trade is interconnected among countries, since we are interconnected in one way or the other, that trade war between China and the US is going to affect us because we trade with China, we trade with the US, we trade with other countries. So I think one of the things that Africa should start doing is to find out or to start strategizing. How do we take advantage of this tension between these two countries? Probably is the time we opened our markets, the time we learned new tricks, the time we started thinking of what can we manufacture, and so on. So I think this trade war is not positive, but Africa can always benefit from it.
Okay, so let's hear from our next guest, that's Bamidele. Let's hear from you what you feel about this. Do you think that Africa will indeed, get to learn from this, and also, President Donald Trump's imposing this 10% on all Chinese imports? Go ahead and tell us if you think that this move will affect global supply.
Definitely. We now have intercontinental value chain and supply chain. You know, a good example would be a raw materials mine in Nigeria, shipped to China, convert from lead to lead ingot, ship from China to Germany, convert to lead ingot to produce battery, and the battery shipped to the US and put in a car that is shipped back to Africa. That's how interconnected global trade has been. And you remember during COVID-19 pandemic, because of the shutdown, the implication and the impact on global supply chain. So we expect, of course, response. And you can see that everybody is already gearing up and responding, not just in the tariff. China is also looking for other markets. Now, I don't, when I look at the topic and look at the fact that Africa is likely going to get investment, I don't think so. I think we are going to have more product coming to Nigeria, Kenya, Ghana, South Africa, African countries, because China is looking for more market. As a matter of fact, the news have it that the government of China is giving a low interest to manufacturers and export credit insurance for them to be able to access other markets around the world to ensure that trade continue to thrive within the country.
Okay, let's hear from Dr. Raimi. Now, PAMA, that's the Pan-African Manufacturers Association, have also projected that the FDI inflows into Africa's manufacturing sector could grow by 4% in 2025. Now, with all the uncertainties in today's global economy, can this target be reached or even exceeded?
My take on this is that Africa, and particularly Nigeria, can benefit tremendously from the brewing crisis between the two largest economies in the world, that is United States of America and China. FDI, foreign direct investment, is very key for our national growth and for economic buoyancy, and to also increase the standard of living of our people. And Nigeria is well positioned to really take advantage or continue its drive at the federal government level and at every state of the federation. Where Nigeria has 36 states in our federation and the federal capital territory. What then do we need to do for the projection that has been made for the manufacturing sector to grow by 4% in 2025? What then do we need to do in Nigeria? First of all, our strength in this country, especially in Nigeria, include that we have the largest population in Africa, 225 million people. We have a youthful population. We have abundance of mineral resources. In fact, Nigeria is reputed to have over 40 mineral resources, metallic, non-metallic, and natural energy resources that are spread across over 500 locations in this country. We have political stability. Since the fourth return to democracy in Nigeria in 1999, Nigeria's political space has been very stable. We also have a government of the day that is highly committed to fighting insecurity. We have technological, smart young people that are really ready for any investor from foreign, from US, from America, from other locations to come and locate their industries in Nigeria. What has been our problem is that our minerals have not, both natural and human resources have not been effectively harnessed to bring the kind of economy that we deserve based on our endowment. And that is why I am focusing, encouraging the current administration, both at the federal level and at the state level, to have strategic roadmap on how to take this opportunity or continue our drive towards taking this opportunity for the benefit of our economic growth. And also similar thing can be done in Ghana, in Kenya, and in other African countries. But is there an opportunity? Yes. Are we prepared for it? We need to be prepared. Do we have strategic roadmap? We need to develop one and pursue it to a logical conclusion.
All right, now, Professor Iraki, let's have your thoughts on what Bamidele and Dr. Raimi have actually said. I remember Bamidele saying that, global trade is interconnected, and also Dr. Raimi stating that, natural and human resources have not been effectively harnessed in Nigeria and also in Africa.
I think I should need to correct one of my colleagues when he says that Nigeria has 250 million people. I think we are talking of Pan-Africanism. We are talking of the Africa Free Trade Area. So we should be talking about 1.4 billion consumers. That is equivalent to the population of China or population of India. So charity starts at home. So even before we think about China, even before we think about the US, we need to think of how can we harness the African market. 1.4 billion people is a lot of population. It's a very big market. We may not have the purchasing power of the US or the purchasing power of China, but we can improve on that slowly by slowly. For example, why don't we improve on the power? Because power is a very important factor in manufacturing. If we are going to manufacture and compete with China or make goods for African continent, we need to have cheap power. Can we focus on that? Congo has a lot of power. A lot of other African countries like Zambia have a lot of power. Can we have a grid that serves all the African countries so that we don't have some countries having excess power, others having a deficit of power? Africa produces a lot of raw materials. We should stop exporting it and start turning that to manufacturing. We need to think about logistics because moving across Africa from one country to another is very hard. So even if you are going to try to have trade between African countries, the communication system is not good enough. And we need, very important, as one of my colleagues mentioned, you cannot talk about industrialization, you cannot talk about having a manufacturing base if you don't have a very good science and technology base. If you look at most African countries, whether it is Kenya, whether it is Nigeria, a lot of the people who graduate from our universities are not in science and technology. If you go to China, it is the opposite. They have a lot of skills in science and technology. That's why they are able to manufacture. That's why they are able to compete with the US, because they have a lot of skills. But it's very important. We are not going to compete with those countries. We are not going to be part of the global supply chain systems if we do what everybody else has done. So Africa should also focus on being innovative, doing something different from China, from the US, and that's how we are going to be competitive.
Okay, well, Professor Iraki, you did speak, quite a bit about China, and you talked about, the need to compete with China. But we know that, China has also, slammed counter tariffs, such as a 15% duty on U.S. coal, coke, and also LNG, and also a 10% duty on crude oil and select vehicles, which, seems to be pretty targeted. Now, what kind of impact do you expect these measures to have on energy markets and also U.S. industries that are in, Africa and countries in Africa?
It was interesting because one of the issues that President Donald Trump has is that a lot of American jobs have been exported in the last few years because of outsourcing. A lot of American companies, a lot of other countries do a lot of manufacturing in China. They do a lot of manufacturing in those countries where labor, where energy, and other resources are cheap. So what Donald Trump probably wants to do is to have companies go and invest in the US. But it's not that easy, because you invest as an investor where power is cheap, where the cost of labor is low, and so on. So what Africa should do is to focus on how we can become competitive, so that instead of those companies going back to the US, they find it so attractive to come to Africa, the same way they went to China, the same way they went to Vietnam. So if we can take advantage of that by putting our houses in order, there's no way we cannot benefit from this trade war between US and China. After all, we have all that we need to become industrialized, to become manufacturers, and benefit from this. We say in Kenya that if two elephants fight, the grass suffer. I want to turn that loud and say that if two elephants fight, maybe the grass would flourish, because we are going to feed the two. We are going to have enough for the two elephants that are fighting in terms of what I have considered to be better investment climate, raw power, resources, and better and all the facets that we need in manufacturing or attracting foreign direct investment.
Right. All right, so let's hear from Bamidele now. Bamidele, PAMA believes that, this current U.S.-China trade tensions will draw more foreign investment to Africa's automotive, textiles, and also electronics sector, not just technology and all that. But with existing challenges like infrastructure gaps and also regulatory issues, do you think that Africa or African nations will really seize this opportunity?
I still have concern about those assertions that investment is going to come into Africa because of trade war with US and China. Because the news we are hearing and the report coming out is showing that these guys are looking for market in other places. So if they are not going to be able to ship to China because of tariff, and China cannot ship to US because of tariff, they are finding a way to drop those goods in Africa, another part of the world. So I really don't understand the rationale behind the fact that they're going to come and invest in Africa, where we have issue with infrastructure, we have issue with power, we have issue with road, we have issue with port, we have issues with a lot of things that is discouraging investment. I really am not of that school of thought and opinion that this thing is going to cause investment to be increased in Africa. Rather, I see trade deflection and dumping in Africa if we don't really monitor transaction being done and trade coming into Africa in such a way that people don't begin to dump in Africa and making our manufacturers not to be competitive. US, particularly China, produce in a very efficient manner. if they are going to begin to send some of those products into Africa, we're going to have issue with our manufacturers who are producing similar products. I think that should be more of our concern on how we can ensure that at the end of the day, we take advantage, for example, what China could have shipped to the US or what US could have shipped to China that now is difficult, that we can begin to consider shipping those things because we already produce it. That is what I think we should be focusing on rather than thinking someone is going to come and invest in Africa when we are having so much challenging with productive capacity.
Dr. Raimi, do you agree with Bamidele on this and also the existing challenges that we have in Africa?
Yeah, actually before now, I have done quite a lot of studies and presented papers on how to have increased foreign direct investment inflow into Nigeria and by extension Africa. In fact, I am not looking at just the tariff war between US and China or US and Canada, US and Mexico before I had done this over the years. In 2023, I presented a paper which is a practically involved research about what are the issues that we already have as a country and by extension, like I said, in Africa. Why I'm using Nigeria as a case study is that we need to understand the domestic environment. And I found that we have factors that can increase this inflow into Nigeria and factors that are drawing down this inflow. I have mentioned some of them earlier. I talked about the advantages that we have in Nigeria, which is an example of many of our African countries. We have the population, which is a market. We have cheap labor, as it were, because of our population. We have youthful population. We have mineral and natural resources. We have all this taxation. Look at what is already happening in Nigeria about tax reform, to be able to streamline our tax administration in order not to eliminate multiple taxation by the federal government. When that is passed into law, it will also improve the inflow. What are the weaknesses that we've had? Some of them have been the fact that, some of my colleagues have mentioned, the issue of energy, that is power. The cost of power and energy is expensive. We need to work on that. We also have some infrastructural challenges. Our current administration in Nigeria is spending close to 3 trillion naira in Nigeria currency in 2025 in order to improve the infrastructural landscape. Road, rail. Look at what is happening in Lagos. Lagos is taking a giant leap in boosting infrastructure. That's why you see a lot of industrial revolution almost taking place there. So while I believe that the tariff war can only add to the boost that I am calling for, there is the need to have a strategic roadmap at national level, at the state level, even at local government level, on how to achieve this improvement in the inflow. I want to believe that President Trump, at a point, will also engage in negotiation, even with China and these other countries in the course of time, in order to resolve some of these trade issues. So that is why we cannot premise our growth, economic growth, only on the war that is brewing up, but rather have a 5-year, 10-year roadmap on how to improve FDI inflow into Nigeria and into African countries, because we have a big market. 1.4 billion people is a lot.
Okay. Now, Professor Iraki, you seem to have something to say on this as well. You were going to say something on this earlier.
Yes, I have something to say because I am a big admirer of China's long-term thinking. Chinese seems to play the wrong game. If you remember when China opened in 1978, nobody thought much about China. But by now, China is a leader in electric cars. China controls a lot of rare earth metals that are strategic in making electric cars and other gadgets. So when I say that Africa can jumpstart its manufacturing capability, it's not something that is going to happen tomorrow. It is something we can plan in the long term, 20, 30 years. We have all the minerals, we have the power, we have the human resources. So through the African Free Trade Area and other institutions, Africa should come together and start playing the wrong game like China. Like one of the things I'm looking forward to is to have some anchor countries in Africa. If you go to the America, US is the anchor country. If you go to Europe, we have had Germany as the anchor country. If If you go to Asia, we have China as the anchor country. So that's what we need to do in Africa. We have a few anchor countries that are going to lead the revival of African manufacturing, African investment. Maybe in the West Africa, we can have China. In North Africa, we can have Egypt. In this part of Africa, we can have Kenya. Maybe in the South, we can have South Africa. But I'm not going to be pessimistic, because I believe that if you look at the resources Africa has, human and non-human, from minerals to raw materials, there's no way Africa should continue being a spectator in the world, in the global scheme of things. It is time we acted.
Absolutely. I think all Africans actually agree with you on this. But then Bamidele, now he did mention a few countries, but then in countries like Nigeria, Egypt, and Ghana, where borrowing costs are reportedly above 25%, how do these high financing costs, affect the FDI decisions and also the growth prospects of the manufacturing sector in these countries?
This is exactly why you need government. Because if we are going to be able to increase our trade volume from Africa, particularly within the African continent, under the African Continental Free Trade Agreement, we need to think of competitiveness. What country typically we do is to subsidize production. The reason you have multilateral export credit agency like Afreximbank, in Nigeria we have Neximbank, is to be able to ensure that when there is high level of high inflation, of course, in which you have to increase your MPR to contain it, and your businesses, manufacturers are growing under the cost of borrowing, that is exactly where the government can step in to be able to help, making funds available at a lower rate in order to help the manufacturing sector, because we must increase our productive capacity in Africa. It's just inevitable. If we don't do that, we are going nowhere. And the way we can do that is to encourage manufacturing, to ensure that at the end of the day, in spite of the situation being faced, like I gave an example, and I keep referring to China, just the way Prof is talking about China, sometimes when I think about the way they think about their economy, the things they do, you can see some very deliberate attempts to ensure that production continue in that country. Whatever is going to hinder production, they are going to contain it. They are going to stop it by giving incentive to exporters, by giving single-digit loan and low interest rate to manufacturers, by ensuring they secure their transaction when they go abroad, by going abroad to have relationship and agreement with different countries to create market for their businesses. Those are the things we have to do. So we rely on government and export credit agency to be able to help the manufacturer to be able to produce in a competitive manner, reduce the cost of borrowing in order to be able to be competitive in the international market.
All right, let's also hear from you, Dr. Raimi. Now, they both have actually talked about, the AFC, that's the African Free Trade Area, what policy measures African governments should focus on to harness, the potential. But then, if you'd like to speak on how these borrowing costs, or the financing costs are going to affect FDI decisions and growth, please go ahead. But I really want to speak to you or ask you about, the freight rates rising on high-risk routes like, the Red Sea and all that. What do you see as the pros and cons of diversifying trade routes and also investing more in alternatives, such as rail and air freight?
That is quite a very good question you have asked there. First of all, looking at the African market and taking a clue from Nigeria, there are a number of current policies that have been put in place by the federal government of Nigeria, for instance, in order to reduce the rate of the cost of borrowing by manufacturers. One of such local bank that is doing that, which is like a government bank, is the Bank of Industry. I'm sure you are aware, and I also want the public across Africa and the world to know that Bank of Industry is currently giving loan to small, medium, and even large corporations at 9% interest rate. That is single digit. It could be better, of course, Even this year, I am aware that the federal government is also plunging more funds to this Bank of Industry. This year also, the Bank of Agriculture is to be re-energized, recapitalized, in order that they have enough money to give to manufacturers, as it were. These are some of the things that I think locally each country can look inward in order, because taking loan from commercial bank at 25 and 30% interest rate can only increase the cost of production, which eventually will increase the cost of those products when they come into the market. Across Africa, I want to suggest that there still needs to do more between and among African countries in terms of infrastructural development, creating easy passage, logistic transportation passage in order to move goods and services across Africa. And one of the models that we can use is the public-private partnership. We can create synergies between the public and the private sector, and some of these banks that were African Bank and other African, even African Development Bank, which is also investing in a lot of infrastructural development across Africa, can also do more. So I believe these are some of the areas and policies that we must pursue as individual countries of among the 54 African countries, and also collectively as Africa.
Right.
And I also want to ask that
just before you go ahead, Dr. Raimi, sorry to cut you off, but we actually need to go on a quick break right now. But when we come back, we'll give you time to speak. Thank you so much. Welcome back, and thank you for staying with us on the conversation. Well, we're still talking about, the China and U.S. trade war, and we still have Professor Iraki, Bamidele, and also Dr. Raimi with us to speak further on this. Thank you so much for staying with us, gentlemen.
Thank you for having us.
All right, so let me come back to Professor Iraki. Now, Professor Iraki, some analysts have actually noted that, while the U.S. is targeting over $450 billion of Chinese goods with tariffs, China's countermeasures, only cover about $20 billion in U.S. imports. Now, what does this stark difference tell us about the strategic priorities of each country? I'd love to hear your thoughts.
I think if you remember when Donald Trump reported that he is going to impose some tariffs on Chinese products, Chinese took a lot of time to react. They didn't react as soon as this threat came into the air, because I think China, to a large extent, seemed to appreciate the importance of international trade. China is what it is today because of international trade. They have been able to export to all the parts of the world, Nigeria, to Kenya, the US, and everywhere. So I think the big difference is that if you look at the percentage of, if you look at the US trade compared with China, the percentage of GDP, if you look at trade as a percentage of GDP, in China, it's about 37%. In the US, about 25%. That clearly shows that China has greater contribution to trade compared with the US. And maybe that's why they did not react as fast as expected. But you can be sure that in the long run, there will be more reactions. But what I've noted from the Chinese market, or the Chinese, is that they usually tend to react more silently than shouting out. So we may not have had much from them, but I'm sure subterranean, they are doing something.
All right. So let's hear, same question from you, Bamidele. What does the stark difference between both countries and their priorities tell us about, their priorities of each country? Hello, Bamidele. Okay, we can hear you now. Go ahead.
Hello.
Please. We can hear you now.
Can you hear me now?
Yeah.
Yeah, I was talking about the real issue is the fact that China is the largest exporter in the world. Global trade in goods, global trade generally is over $30 trillion. Global trade in goods is about $24.5 trillion. China is the largest exporter in the world with over $3 trillion in trade. A majority of this trade is going to the US. Donald Trump knows exactly what he's doing. He understands the fact that their dependence on China for their shipment is not as much as dependent on China on the US. And when you compare the volume of trade, US is the largest importer in the world. Everybody wants to do business with the US. Canada, Mexico will be the largest trader in terms of export to the US, and of course, followed by China, and then, of course, the EU. So the facts remain that China has a concentration risk on the US in terms of the volume of trade done with the US. And Trump is basically leveraging on that. He has done his calculation, looking at, look, if you're not going to buy from us, we have other places we can sell this product to. You depend so much on us for your business. We need to get you to do what we need to get you to do, and we're going to impose this tariff. So it's because China, over the years, have, of course, largest trader in the world, largest exporter in the world, over $3 trillion in trade, with a lot of dependence on the EU and the US. And that's why this is possible. And that's why, of course, it took them time, because not so much in terms of when you're looking at, because US have options, they have to be strategic in their response. You can't just impose on product that US have a lot of options where they can ship to. You want to look for product that you know that this is going to pain them, this is going to have a lot of impact on the economy, so that they will also have a rethink on the imposition of tariff on you. I guess that's the reason why it took them a while to be able to do their research and be able to know which of the products they think they should go for. But by and large, the fact remains that they depend so much on the US as much, less than US depend on China.
Okay, so now, Dr. Raimi, I would love to hear your thoughts on that as well, and also what you feel this would mean for, it would actually mean for consumers and also the inflation trend.
Coming back here. You see, over the last 2 weeks or thereabout, I've listened to many commentators, many condemning President Trump for imposing tariffs on China and other countries across the globe. And I want to say that perhaps such opinions have not established the fact that President Trump is a smart president and is a real businessman. And of course, we all know that he has a background in private sector, and he had a lot of businesses, and he's an economist par excellence. So he has already done his arithmetics. He knows, he has all the facts with him to know that US is a darling of most countries of the world. And China particularly knows that they trade more with US than US trade back to them. And that is why China, of course, had to be very careful in the way they have handled the issue of tariffs. And that's why they've selected specific products that, of course, they know that US might also be looking at how to perhaps maybe in the course of time have negotiation. Don't forget that China have already petitioned US to the World Trade Organization about this imposition of tariffs. So I believe that President Trump, while his actions, not only on this tariff, but on other aspect of his executive orders and the policies is coming up, while I believe that they will also have some negative consequences, majority of them will eventually be to the benefit of the United States of America and also to his administration. It is now left for China, left for Nigeria, African country, and other region to also see, to put their own houses in order. And that is why I'm saying that for Nigeria and Africa, even before now, we should have developed a roadmap of how we should also pursue producing most of what we need, and also having leverage on our natural and human resources to be able to also have a stake in the international market. This is my take on what is currently happening, and this is my suggestion in order to benefit in more as Africans and also across the globe in international trade.
Okay, so but then you're yet to tell us what this would actually mean, for consumer prices and also inflation trends, particularly in emerging markets like Africa.
Yes, the implication is that if there is high tariff on any product, eventually it means that these prices will be, by manufacturers and producers, will be transported back to the end users. That's what it means. It means the cost of goods and services will increase. For instance, if China will have to now, produce at a higher cost because of the increase in tariffs, and they ship those products to Africa, to Nigeria, it means we are going to be buying those products at higher prices, except that those manufacturers will have to do what I call backward integration, or they look inward to see how to engage in some other cost minimization strategies, and we have a number of them. And in order to do what I call cut and fill, of course, if tariffs have increased, are there other areas that they can lower their existing cost? If that is not done, the increase in tariff will eventually means that products and services will increase more, and eventual buyers or end users will pay more. And for me, that's why I'm advocating that most of these products should even be manufactured in our own countries in Africa, like in Nigeria. Chinese companies should come here, do merger, do acquisition, buy stock in our existing companies, and produce in Nigeria. We have the land, we have mineral resources they need. They don't have to take it back to their country. Americans companies should also come here, and our government should continue to create the enabling environment, reduce tax, provide incentives, reduce interest rate, do more to protect our lives and property security, stabilize our political environment, and develop more on our infrastructure. All these are things that will boost companies to come and locate their industry in Nigeria. We need a lot of that to be done in Nigeria, in Ghana, in Kenya, Africa, and Africa.
All right, let me just quickly pass this question to Bamidele. Now, Professor Iraki did talk about technology earlier, and we know that there's a lot of talk about, investing in digital technologies, automation, and also AI to enhance competitiveness. Now, would you say that it is realistic for African manufacturers to adopt these innovations quickly, or do you foresee some challenges that they might face that would, stop them from being able to adopt them?
No, I mean, they can adopt it quickly. It's all about project management and deployment. I don't see inability to be able to adopt those technologies. I feel the main focus for us, and I'm talking now as far as African Continental Free Trade Agreement is concerned, because this is important. It's important because the way the world is going, we need to find a way to do business with ourselves, which is the whole idea of signing that agreement. So that at the end of the day, as an exporter in Nigeria, there are goods I can easily export to Ghana, Cote d'Ivoire, Kenya, that easily will be acceptable, that European is going to give one reason or the other where they're going to go to buy. And they're going to give non-tariff barrier that will not make them to be able to buy, such that at the end of the day, I'll be forced to adopt some technology that probably will not need if I have to trade those products in Africa in the first place, because the product it's not like it's bad the way it is, but because of the request. For example, I'm shipping to Europe, they're talking about fair trade, they're talking about organic certificate, talking about a lot of things that I might have inherently by virtue of the way I do my business, but because I don't have the cost to be able to bring on those certifications and technology, then it becomes difficult for me to trade with them. That's the reason why we need to look at Africa and see how we can trade with ourselves, so that even if I'm not able to invest to be able to bring on those technology and be able to trade with Europeans, like the Prof said, 1.4 billion markets available for me on the African continent. That should be the focus of the government of Africa, to be able to easily, through reducing logistic costs, reducing cost of financing and doing business, to be able to ensure that we're able to trade among ourselves and become self-sufficient to the extent that we depend less on other parts of the world.
All right, now, Professor Iraki, while, we seem really optimistic about, trading within ourselves in Africa and, trying to find solutions to trade, let's quickly discuss geopolitical risks, which are still very real. Case and study conflicts in the DRC, and also inflation hitting 35% in Zimbabwe and around, 24.5% in Nigeria. How do you think these challenges will shape the overall risk profile of FDI in Africa's manufacturing sector?
That's a good question. But before I answer your question, maybe I need to cap what one of the participants put about inflation.
Well, please go ahead.
To me, that's very good news. If you have tariffs, like what's happening between the US and China, the price of goods will go up. And that will have political implications. If you remember, President Trump decided that he is going to postpone tariffs for Mexico and Canada because he knows there are political consequences. If your politician and prices goes up, that's not very good for your voters. And that's the beauty about it, that whatever tension you have, economics and politics come into play, and that can be adjusted with time. We also need to remember that AI presents Africa with a golden opportunity. We can leapfrog smokestacks. We don't need to go to the smokestacks that Industrial Revolution came up with. We can jump directly into artificial intelligence. A very good example. If you talk to most Kenyans, they have never used a credit card, but they have used M-Pesa. So we're able to jump credit card directly into M-Pesa, and we do a lot of transactions by phone. And there's no reason why we cannot do the same in terms of industrialization. When we come to your geopolitical risks, I think that is one problem we have in Africa, why we are not able to attract direct investment, because everybody portrays Africa as a place full of tension. Something in DRC now, something in Ethiopia, there's something in Sahel. So if Africa has to attract investments, one of the things we must do is to put our country or our continent in order so that there is peace, there's prosperity. As an investor, I don't want to worry about somebody coming and attacking my mine or my mines at night. I don't want anybody interrupting with my supply chain. So I think there are a lot of geopolitical risks in Africa, but we can put them in order. Democracy has been flourishing in Africa, and it should flourish more. I'm very happy when I hear one of you from Nigeria saying there is democracy in Africa. Because when I was in high school, I used to read about Nigeria, and all I was reading about was there was a coup. Shehu Shagari has been overthrown. But nowadays, I see there is democracy in Nigeria. People have voted. We have a new president. So I think if we put our house in order, we reduce these geopolitical risks, there's no reason why people cannot come and invest in Africa the way they did in China, the way they did in Vietnam, the way they did in other countries in Southeast Asia. But to remember again, charity starts at home. That must apply to Africa.
Absolutely, Professor Iraki. But then let's have your final thoughts on all that we have discussed today, this evening. Professor Iraki.
It's an interesting way to...
Professor Iraki, still on you.
I start or somebody else? Who comes first?
Professor Iraki.
You need to control. It's interesting. I like the way my colleagues are keeping on talking about Africa, not Nigeria, not Sudan, not any other country, because if Africa has to become an investment destination, if Africa has to turn around, it must be done by all of us. We all must work together. The dreams of common Nkrumah, the dreams of Pan-Africanists must now be revived, but economically. So that when we talk about financing, when you talk about logistics, when you talk about labor skills, we should talk about it from Pan-African perspective, because 2 or 3 is always bigger than 1. So if Africa comes together, there's no reason why we cannot turn this continent out. And I want to add with a simple example. When I was doing a PhD in the US, I had 2 Nigerian PhD supervisors. And I've been wondering, why are they not in Kenya? Why were they not supervising me in Kenya? Must they go elsewhere? So another way to turn Africa around is let's bring all those skills that work in other countries, let them come and work in Africa and turn the continent around. It is our continent.
Okay, all right. Now let's hear from you, Bamidele, your final thoughts.
It's time for Africa to take our destiny into our hands and see how we can make AfCFTA work. Everybody is protecting their territory. Protection is on the rise, and this is not good for the global economy. We have signed African Continental Free Trade Agreement. It's important that we ensure we overcome every impediment and hindrances to the realization of the dream of African founding fathers to ensure that we have one united Africa for which trade can help us to bring prosperity, reduce inequality and poverty on the African continent. All
right. Now let's hear from Dr. Raimi, your final thoughts, especially on key policy recommendations that you would offer, African governments to help them not only mitigate the risks posed by, these tariffs, global trade disputes, but also transform challenges into opportunities.
Okay, very quickly. One of it is to ensure political stability across African countries. Secondly, we must leverage on our individual countries' comparative advantage. We must harness our mineral and natural resources and cascade them for the benefit of our individual country, Africa, and the world. Thirdly, we must not just be thinking of even doing business among African countries alone. We must advance to also be able to play big in the Committee of Nations in Europe, in Asia, in America. This should be our vision. It should not just be the 1.4 billion people that should be our target. Our target is to provide products and services that are acceptable across the globe, even though charity will begin at individual countries, Nigeria, Kenya, South Africa, across Africa and beyond Africa. This can be done if our individual governments have performance-related strategic plan, 5-year plan, 10-year plan, 20-year plan for our individual country, for Africa and across. That cannot be measured on a yearly basis how much progress we are making. That is my advice to our individual government across Africa and also beyond our individual country and Africa as a whole.
Oh, all right. Now, that was Dr. Taofiq Raimi, business economist and policy analyst. We also had Professor X.N. Iraki, Professor, University of Nairobi, Faculty of Business and Management Sciences. And we also had Bamidele Ayemibo, his lead consultant, 3T Impex Consulting. Thank you so much, gentlemen, for your expert's opinion on this particular topic. We really appreciate you for your time.
Thank you very much.
Thank you for having us.
Good evening.
It's a pleasure. And with that, we've come to the end of the conversation. Thank you so much for staying tuned. Until next time, I am Darshan Usman. Have a wonderful evening.